Hey guys, welcome back to the channel. Today we will talk about Sofwave. I believe the stock has the potential to 5 to 10x over the period of next 5 to 10 years. They have a lot of tailwinds right now. They're in a perfect industry. The operators are really good, and I do believe that there's a huge amount of potential. Then the risk reward is really good with this company. This company is listed in Tel Aviv in Israel. So if you are not in Israel, you'll have to set up an international broker's account. I use Interactive Brokers, IBKR. I have a link in the description. If you use that and sign up for the account, you can get up to $1,000 in stock, in their stock, which is amazing, and I'll get a little bit of a referral fee as well. So this is the machine that Sofwave sells. They have a proprietary technology called Synchronous Ultrasound Parallel Beam. The short form for that is Superb. So think of it as a high-tech way to tell your skin to produce more collagen, which reduces the wrinkles and tightens the skin up. So it's a way of anti-aging. A lot of the GLP-1 customers are also using this machine due to this effect. It tightens the skin, because we've all heard about Ozempic phase, where you take these weight loss drugs and your skin starts to get a little loose. So what they do is basically they use these 7 parallel beams from this applicator to tighten the skin up. These waves go up to 1.5 millimeters deep in the skin, and the unique cooling system called SoftCool makes it more comfortable and safe for all skin types. So it's less invasive as compared to the other treatments out there, and it's also cheaper. We'll get into the different the comparison between the different solutions that are available in the market. So here is how the treatment is done. The machine is basically applied to the skin. It warms it up to 60 to 70 Celsius, which leads to more collagen, and just helps the skin to tighten up. As we can see some testimonials here where people have been sharing how the skin has started to look younger, and I've gone through a lot of testimonials all over the social media, and most of the testimonials are really positive. So yeah, this industry and this specific sector has been seeing some really good growth. You'll see the search trends for skin tightening treatments have been going parabolic, and so is for aesthetic treatment. And a lot of the companies in this sector, the likes of Galderma, Botox, and everything that's around this in this industry has been exploding recently, and everyone wants to look young, everyone wants to look more attractive and everything else. So due to this, there's been a lot of tailwinds in this specific sector right now, and this is one of the reasons why I'm really liking the stock. A lot of the stocks that I've seen in this sector are very expensive, so they are every good company is not always a great investment, so that's why they're a little less interesting. But this is a company that I see a huge runway for, and potentially a multi-bagger in insights here, especially given the management, which has already taken 2 companies public, and one of them is $350 million company. So there's a proven track record of taking companies public and making some successful entities out of them. So the non-invasive aesthetic treatments market size, right now it sits at about $83 billion, and it is anticipated that it will keep on growing at 12.44% CAGR, and it will reach $238 billion by 2034. So the CAGR of this industry is so strong that small players in this industry can lead to really huge returns for the stockholders, and this I feel like is one of those companies. So the Kardashian effect has been real for them. You can see here Kim and Khloe Kardashian posted recently. They said software heats the skin to trigger collagen production. There's no downtime and totally lifts, which is why I would do it wherever I possibly could. Lol. So this post came out. It says 5 days ago here, but this post came out in March. And since then, we'll see here the search trends for Sofwave have been exploding. So this is actually translated into the website traffic as well, and see the attention is clearly there. And I spent a lot of time on social media, looking into the reviews and everything else. And most people really love these treatments, and they see immediate effect. I think the biggest question here in this industry is, what are the other competitors, and how do they compare to Sofwave, and is Sofwave a fad? Because most of the investors right now are thinking, what if this is not stickable, right? What if this just goes away? So that's why that was a question that was in my mind as well. So I kind of compared the other 2 solutions that are kind of comparable to Sofwave. The technology, this one is micro-focused ultrasound, and this is monopolar radio frequency. With Sofwave, the target depth is 1.5 mm, so the heat only goes up to 1.5 millimeters in person's skin. Whereas with Ulthera and Thermage, it's way deeper, and that has more repercussions, right? So the key benefit for Sofwave is wrinkle reduction, lifting, skin tightening, and improved comfort. Whereas Ulthera is deep tissue lifting and tightening, and Thermage is the same. Over here, you can read about it. The bigger competitor for them is Ulthera and not Thermage, so that's why I guess we'll just focus on Ulthera for this video. The patient comfort. So this is very important for Sofwave. Generally, it's considered more comfortable, and due to the the shallow nature of the product. For Ulthera, this is more painful, especially at deeper settings. So this is another reason why Sofwave is being preferred by a lot of people, because it's less painful and less invasive, and also it's way cheaper. So Ulthera can cost up to $4,500. This says the cost is up to $4,500 as well for patient costs for Sofwave, but it's more close to $3,000 because that's what I was able to find on most of the websites I was looking at. So yeah, this is the other really important thing. The treatment time is 30 to 45 minutes, whereas Ulthera it's about 30 to 90 minutes. The risk profile is extremely important to look at, and Sofwave has low risk of damage to the underlying structure, whereas Ulthera has potential for fat loss, so it could actually impact the person's skin. You can have like a saggy face with Ulthera. It's way more expensive, it's way more invasive, it's painful, and the results take up to 3 months, whereas Sofwave, 30 or the 40% of the results come to the person who's getting them in the next 1 hour. So that's the other thing with Sofwave. If someone wants to get a treatment for a specific event or something, they're definitely going to go with Sofwave and not Ulthera. And Ulthera takes time to heal, whereas Sofwave doesn't. So that's another thing that is really good for them. Now, the one thing that I really, really love about this company is the way they're thinking about the providers. So the biggest competitive advantage for Sofwave is the fast ROI. So if they compare, if someone was to open a dermatologist clinic and compare the other solutions available in the market, Ulthera has the cost is way higher, and it takes way more time to get the money back. So basically, if you were to get a Sofwave equipment for your clinic, you can get the money back in 4 to 6 months, whereas with Ulthera it takes over 1 year, right? And it's more saturated as well, because there's only $1,500 world over, or 1,500 machines world over for Sofwave, whereas Ulthera is a more established company. There's more competitors. You can go to clinic A versus clinic B, whereas for Sofwave, there's not many people who have this, and that also gives them a huge moat, because the clinics who have the Sofwave treatment, there's probably only one in a large surface area. So that's another key benefit for the people who are buying the Sofwave equipment, because they can get way better ROI from purchasing a Sofwave equipment as compared to an Ulthera equipment. So the operating costs are lower as well. It takes it's just a single session from 30 to 45 minutes. Treatment with lower minimal time, downtime enabling high patient turnover. So what downtime basically means is the machine, if it's being used for 30 to 45 minutes, there's no recharging or something, it takes you can't use the machine for the entire day or something. There's minimal downtime. So once one session is done, if the second person wants to come in and get the treatment, they can basically get that done as well. So that's really good, right? And there's a low consumable cost as well, so that's the other benefit. The patient charges $3,000 per treatment, and they have a way to make sure that the providers don't charge less and potentially dilute the market, and we will cover that in the next slide. The acquisition cost is lower, so they do a lot of marketing, and that makes the treatment more famous, and due to that they're getting a lot of this demand that's coming through. So the frictionless sales model is very important for this company, and I do believe this will lead to higher margins and a higher valuation in the future. So what happens is customer makes the initial purchase of the device. So a clinic would go and buy this device, and then device is preloaded with 3K pulses starter kit. So the pulses are the units that are used when someone comes in for the treatment. Think about it as tokens. If you're running an AI model, you need tokens, right? You need a certain amount of GPU hours basically to run your queries. Same thing with this. You need pulses to operate the equipment. Each pulse costs about $1.5. So every time someone comes in and gets a treatment done, Sofwave gets $1.50 per pulse, and each equipment or each session takes about 200 pulses. So they make around $300 from every treatment that happens at the clinic level. So this is a genius business model. I think this is something that needs to be studied, and like I think that's something that is going to help them in the future, because the gross margins on this thing is about 90%. So it's like pure income for them every time someone comes in, and this is the portion of the business that's been expanding rapidly recently. So you make money first when you sell the machine, and then you also make money when actually someone comes in and gets the treatment done. So I think this is the biggest thing. So pulses are consumables and resupplied via purchase downloads from Sofwave's e-store. So this is really important, and this will help as the number of machines that are sold goes up. This revenue is going to go up, and we will look through the slides as well to see how this has actually been expanding a lot. So this business is a 90% gross margin business. This the pulses business, because they're just selling credits, right? And it's genius, right? Because like this is basically pure profit. So if the install base goes up, which we will cover in the future, in the next slide, if the install base goes up, the number of pulses sold will go up, and the net income will go up. So the margins will expand substantially, which is also a huge thing for them, which will really help them in the future. So this is the superior ROI than the competitors. So you look at this is the breakdown of all the states in USA, and what kind of ROI could the businesses in these specific states expect if they purchase software equipment. So you'll see the dark blue ones are ROIs over 400%. So these two states, there's over 400% ROI. So you can get your money back potentially in 3 months on this equipment. And then everywhere else in the states as well, like besides Colorado, I guess is less than 100 maybe here as well. But most of the states are over 100%. Some up to 200, 300% as well. So this is such a great business model. Obviously, these are going to go down as more clinics adopt the technology, but this doesn't impact Sofwave, because the thing is, like, every time someone comes in and buys the equipment or like uses the equipment, they get some money from that, and when they sell the machine itself, they make money from that as well. And if the demand keeps on going up, there wouldn't be any and there's no cannibalization. They can really do continue to do well that they are right now, as we can see from here. So the Q4 revenue growth, these are the Q4 revenues for each and every quarter since 2020. As we can see, the revenues keep on growing. The annual growth for revenue over the last 5 years has been at 70% CAGR. The blue bar in this bar here is the pulses revenue that we talked about. So we'll see how, they probably, based on this, there's almost $35 million of medical equipment sales. So at $100,000 an equipment, they probably sold about 350 machines, and and that was the same for 2023 as well. So they probably sold about 350 machines in that year as well. But we'll see the pulses revenue almost doubled from year to year, right? So the more this part goes up, like the total install base goes up, this pulses revenue is just going to keep on going up, and this will go directly to their bottom line, which is huge for them. And I think this is such a great business model, and this is one of the reasons why the quality of earnings is going to be so strong that this company could actually demand a premium multiple over their competitors. So the balance sheet is very clean. There's no real long-term debt here. The company is almost break-even positive. They have a little bit of a litigation going on. I was studying the litigation. I don't see there being a huge trademark risk with the trademark lawsuit that they have, and that's been one of the reasons why they've been partly loss-making. It's almost break-even, so the loss is not really that huge. So look at some scenarios and valuation based on how I see this business going forward and why I think it could be a 10x. So currently they're selling around 400 machines per year based on all the revenue since inception. I believe they've sold around 1,500 machines. They could get to around 55,000 machines in the next 5 years with expansion in China and Japan. So they became the first provider in Japan to provide this type of an equipment there. They got approved in Japan, and there's a huge demand for these products in Japan as well. So they'll see a huge maybe a step up in revenue this year from this. And in China also, they're working to get the necessary approvals, and China is also a huge market for this type of business. So if they do get approved in China over the next 2-3 years, it would be very easy for them to sell 3,500 machines in the next 5 years, maybe 6 years. So if they say by 2030 they get to 600 machines per year, they'll be making $60 million in device sales and around $100 million in pulses sales. I'm assuming that they'll increase the price. So right now they're selling a pulse for $150. In 5 years time, they have so much pricing power that if if the charge for one of these services in 5 years is $4,500, they can probably charge maybe like $250 or $3 a pulse. I mean, it's not that expensive, right, for a clinic to be paying $300 per pulse, like $600 potentially per treatment, when they are making, when they're making almost 6,000 per device sales. So, like, I won't be surprised if that, I should say $100,000 a device sale. So I won't be surprised if this continues to, go up, which will give them so much pricing power. And again, the quality of earnings goes up due to that as well. So they'll possibly generate $80 million in total net income in 5 years if these scenarios play out. The current market cap is only $200 million US, and they are planning to list on NASDAQ in 2026. So let's say, under a hypothetical scenario, that they get to $80 million in net income by 2030. That would mean the market cap at 10 times sales would be around $1.6 billion, meaning that could be an 8x from here on. If they do get on NASDAQ, we know how on NASDAQ the valuations are a little higher as compared to, all over the world. So, I mean, who knows, this could be a 10x as well. So that's why I would say it's like somewhere in the range of 5 to 10x over the next 5 years. Like, there's obviously execution risks, but most likely they're in a very, this business is at an inflection point, and if this continues to grow, it'll be great. They could really expand their income. And the other thing is that as we saw, the search trends only started expanding or going parabolic in April. So the Q2 revenue Q2 income is not really factored into this company's valuation. So we would actually find out in Q2 like how good or how much what the impact of this Kardashian social media following is going to be on their revenue. And this is another machine that they're launching. This is more for the body itself. So like besides the face, they're also getting into there's this new machine. It's called Pure Impact Muscle Toning Treatment. So this would be something that could be another growth driver going forward. The bull and the bear case. So just want to summarize a few things as to what could work out versus what could not. So I mean, there's good safety, comfort profile. There's a growing TAM with strong tailwinds. This is a recurring revenue model, which does lead to a higher margin and better quality of earnings, leading to a higher valuation. The strong clinic ROI is also driving a lot of adoption. And major geographical expansion underway. Japan coming soon. China probably at some point as well. So this will continue to help them out as well. Management team has a great record, as I told you. The bear case, I would say there's intense competition in this market, and it could be a fad potentially as well, right? So if there's something else that comes in, becomes viral, might take the attention away from them. So that could be a risk for them going in the future. Execution risk: can they scale globally and manage supply chains effectively? That's another material risk. Regulatory hurdles, especially in new markets like China. So especially now in the US as well, with the appointment of RFK Jr. I don't see this market being impacted by that too much, but you never know, right? What can happen? And then this ongoing trademark litigation. We don't really know when this comes to an end. This has been a drag on the profits, so this could continue to be a drag on the profits. I don't really see the core patents being affected by anyway, but this is going to be an extra cost on the business for sure. And the aesthetic markets are often discretionary spending. So if the world was to go to a place where people don't have the money to spend on these things, they could also get impacted. And 2020 COVID was another huge reason for them getting impacted at that time. Sofwave Conclusion. So I think they're just riding the Kardashian wave for now, or we're just talking about like, is this business successful, or are they just riding the wave? The evidence points towards the latter. Like, it seems like they have some sort of stickability. The treatment is gaining a lot of traction. It's word of mouth. Like, it's easy to say, what if it's a fad? The thing is, like, even to get, like, if there was a competitor that would come in and take share away from them, the business would first have to have word of mouth. They'll have to spread the word. They'll have to say that the machine actually would have to work. And like, the adoption of new technologies and like when it comes to someone's skin is not that easy, right? No one is just gonna go and get a different treatment that comes to the market. Like, people actually want to go word of mouth, or they want to listen to other people or see people who have actually been impacted by it. And given how much the search trends are going up for them, website traffic is going up for them, the subdomain traffic for becoming a provider is also going up for them. So there's a good chance that they'll sell a bunch of machines in Q2 and Q3. And the technology addresses real needs. Patient satisfaction seems high, and the clinic economics are compelling. The recurring revenue growth is a strong sign of real adoption and utilization. That the Pulse's revenue is going up. So obviously, there must be sales at the clinic level. So that means that the adoption is good. Customers are coming in and using the equipment. So that's the other thing that will continue to help them out in the future. It's a high growth story with exciting potential, but also comes with typical risks of stage and sector. So that's always there. But risk reward seems high. It will be a 2% allocation for me in my portfolio. So right now we set at 4% Celsius, 6% TBP, and 2% Sofwave. We'll continue to cover more stocks in the future, hopefully. And this one is really interesting to me. It's a call option on the portfolio. It could potentially go to like half of where it sits right now. But then if it does work out over the next 5 years, this could be a potential 5 to 10x. So this could really help the portfolio over a longer period of time. So this is my thesis. If you're still listening, I really appreciate you. Thank you so much for listening. Please subscribe if you haven't already. It really helps me out. Just gives me more motivation to cover these things. We'll continue to cover stocks which have great risk reward profiles. And hopefully we'll see you in the next video. Take care. Bye.